So we're a boutique tax consultancy firm established in Dubai, serving businesses around the GCC.
So why did you establish yourself in the GCC region?
Because of the hugely interesting developments around the introduction of VAT, but also the more broader picture, the developments in terms of internationally around BEPS and the disclosure, exchange of information that is going to happen within the GCC going forward in the next few years.
Do you think things like profit shifting and BEPS will actually force more governments to use VAT or other transactional-based taxes as a way forward?
Yes, definitely. I think that's a correct analysis. You see internationally a lot of governments shifting away from the classical corporate income tax, personal income tax towards consumption taxes like VAT. So I definitely expect that that's going to happen more in the future. I think the impacts right now around BEPS on the region are more around, okay, what will be highlighted is what kind of turnover do I have, what am I using to realize that turnover, and a lot of the foreign businesses that are realizing turnover here, a lot of the transactions between the foreign head office and the GCC subsidiary is going to be open much more to scrutiny. Ministries of finance of the different countries are going to put the puzzle together and kind of say, okay, is the fair share of tax being paid? The huge complexity of these international structures means that a lot of these governments will go for something which is relatively more easy, and which is the introduction of a consumption tax.
One thing we've seen with the introduction of VAT, or rather before the introduction of VAT, is a lot of the accounting setups or the ERP systems that companies had, very much like the Wild West. There was no real guidelines, unlike a lot of European or US companies where they have to follow IFRS. There was nothing like that here in the GCC. How do you think that the introduction of VAT will help companies be able to structure their businesses in a much better way to allow them to actually have more efficient reporting, not just in VAT, but in other areas as well?
Yeah, so I think I share your analysis. Up until very recently in the GCC, there was little reporting. I'm not going to say that there wasn't any reporting, but because of the frequency of the reporting with VAT, things are become much more transparent, much more quickly. And therefore, there is a need to look more close to, okay, what are my transactions today? What am I actually making? How much profit am I making? At which point am I making it? Because all of this leads into when do I actually declare my turnover for VAT purposes? And that's where a lot of the businesses in the region were, let's say, not very sophisticated in terms of their use of accounting systems for the purposes of actual tax reporting. So that's something which is definitely new for the region and which is proving a challenge.
It's been just over a year now. VAT is live, 3 countries now, but it's still causing problems. There's a lot of companies out there that think they're actually VAT compliant because they can actually produce a tax return. But what we're actually seeing is that the quality of the data in those tax returns can be pretty poor. What's your experience of this and the perception of clients that they're compliant compared to if they really are?
Yes, I share your analysis. It's not because a VAT return has been filed that you're necessarily VAT compliant. There's much more beyond that. And I think a lot of the issues with the data are going to be more visible once the FTA starts auditing in a much more, let's say, in-depth way. I think a lot of businesses still have quite a long way to go. The ones that come and consult us, we see a lot of issues and we need to find a way to get them as compliant as possible as soon as possible. But also 100% compliance is a utopia for us. I don't think it is possible, or at least it's very challenging. It's also not something that, if you look at businesses in other parts of the world, often you have a business choice to make and a compliance choice to make, and you have to weigh one against the other. I think there's a lot of learning still to do for businesses in the UAE, There's still a lot of teething problems. There's what we see a massive amount of corrections made to the VAT returns simply because at some points a certain decision was made to go with position A. Later on, it became apparent that position B was actually the correct one, and so we have to correct for the past. Other businesses also, what we see sometimes is up until now they thought that they could handle with their current processes, and in 2018 they come to the conclusion that the processes which are put in place are too burdensome, they require too much time, too much reconciling, and only now they're they're actually implementing a solution in order to make that a little bit lighter.
A huge number of companies have either implemented their VAT solutions in-house or use inexperienced consultants due to the perceived lower price to implement. And as we all know, that's not actually often the case because these projects tend to cost a lot more money. So whilst the solution created may be able to determine a tax rate, they're still very heavily reliant on manual intervention from the end users who themselves have very, very little VAT experience. So this often leads to a lot of incorrect tax treatment on the transactions. So either a company would be blind to the mistakes and risk being caught out in an audit, or they will have to be employing more resources to try and find and manage the VAT-related issues. Are you seeing companies trying to clean up the mess created by the bad VAT implementations?
There's definitely a learning curve for a lot of businesses in the GCC, and I think a lot of businesses had to go or tried out different routes. Sometimes they come to the conclusion that one is less efficient than the other, and I think we're a little bit moving to that period right now, where people say, okay, we're filing VAT returns, we're applying it, we have more or less compliant invoices, but now we're getting into the stage where we're evaluating whether the way that we've implemented it was the right way or not. And obviously, if you've never done this kind of implementation or project, it is a very challenging thing, and it's a difficult choice to actually make. And I think that's where the challenge lies for businesses. Choose the right provider, fit for your setup and organization and structure. Yeah.
Something you see a lot of in the Middle East is company portfolios that have diversified into multiple industries, construction, retail, manufacturing, education, and often they will have residential and commercial lettings. This obviously has a big impact around the VAT determination and in particular around the ability to recover the VAT. Do you foresee that companies will need to restructure their businesses in any way, even creating new legal entities for VAT reasons?
Yeah, I think the diversification of the portfolio of a number of bigger businesses is extremely interesting to look at, and how VAT applies to that, and what kind of challenges that now creates for businesses is really interesting to see. I do expect, as we've done for a number of our clients, businesses to also set up separate legal entities per type of sector, which if any time that a sector requires specific VAT treatment or is a little bit different than the normal treatment, I do expect that from a controlling perspective and management perspective, that companies will tend much more to set up a different legal entity. I think all of the sectors which you've mentioned are challenging from a VAT point of view. You mentioned trading and logistics. I think the supply chains running through the GCC can be, because of the institutional framework, the customs framework as well, can be extremely complicated, and I feel that that's an area in which there is probably today a lot of businesses that think they are compliant, but they are not. Construction is another one. Construction and real estate in general. I think that there's historically a number of structures which have been set up, ways of dealing with brokers and third parties, which prior to the introduction of VAT didn't have a real consequence in terms of who reports what. It didn't really matter who reported the turnover. Today it does matter. So it's going to be interesting to see what position that these companies will adopt. we've been assisting a lot of businesses with restructuring not only their supply chains but also their legal structure, simply because of the introduction of VAT, they were prevented from continuing to do their business as currently, or the way that they were currently doing their business was not compliant. And because of the introduction of VAT, this would have been even more visible to the authorities. So that's a lot of the work that we've been doing, and I do expect a lot of businesses to reorganize because of the introduction of VAT. Yeah.
So Innovate Tax is the leading global specialist when it comes to tax automation and Oracle. When we work with a client, we have a very, very good understanding of the tax laws and the requirements. We operate in well over 100 countries globally, and we find lots of similar patterns around tax or VAT. But we're not tax experts, not true tax experts like yourself. In your opinion, how important is it to have the right resources in place? So, for example, a company like Aurifer for the tax advisory, but then also partnering with a company like Innovate Tax to make sure that the solution is actually implemented in the best way possible.
I think it's extremely important because the type of businesses that we deal with, they are too big to do everything manually, or they're too big for simple solutions. So I think it is highly necessary for businesses like ours to team up with businesses like Innovate Tax, simply because it doesn't matter what we advise or whatever position we take or whatever route that we want to take. There is an implementation bit to it from an IT point of view that we can't do. And one thing strengthens the other. I think a well-implemented position, and well-adopted position, and an informed position by the leadership of the company, which is then implemented, can lead you very far in terms of managing the compliance and managing the reporting and the accounting for a business.
The GCC has now seen Saudi Arabia, the UAE, and most recently Bahrain go live with VAT. And we expect in the future that the remaining 3 GCC states will do the same. The GCC structure seems to follow very much in line with the European model, and the European model has what we'd call in the intra-EU VAT reporting, which is a special report around the sale to other EU countries, and also intrastat reporting. In your opinion, do you think we'll see something similar as an intra-GCC VAT report, for example? And if so, when?
That's an excellent question. It is legally foreseen that there will be an exchange of information for transactions within the GCC, between the GCC member states. To date, it's not active yet. It is highly necessary in the future to have one, because as we can see in the European Union, for example, it reduces the amount of VAT fraud. So it is something that the governments at some point will implement. For the purposes of that implementation, I think it's important already to anticipate to this implementation, to anticipate to this reporting, because it will require that a lot of the data of the company's transactional data of transactions with the other GCC member states is mapped already. And if you're doing an implementation right now, it makes a lot of sense to already do that mapping and to make sure that you have that split according to the countries that you're exporting to, be it goods or services, or the countries that you're bringing in goods from as well. So I do think that this is a really important evolution, something to take already into account at this point, because at some point it will be implemented by the GCC states.
Yes, you mentioned about goods and services, which many won't have even considered in their setups at the moment. But with intra-GCC, we're likely to need, or we will need, the split between goods and services, both on purchases and sales to and from the GCC region. We also need to look at the triangulation tax as well. So I completely agree with what you're saying there about making sure that you're ready now. I think recently we heard that Poland announced that they will be dropping the VAT return in favour of the SAFT reporting. When do you think the United Arab Emirates, for example, or the other GCC countries will be looking to shifting their reporting to more, the SAFT type reporting we've seen in Poland, or like the FAF reporting, and then potentially dropping the tax return completely in favour of doing the tax returns for you based on the information that they've been able to extract from the clients' systems or the taxpayer systems.
I think what has been implemented in both states is a relatively classic traditional way of reporting. It's a passive, I plug in the numbers and I communicate it to the tax authorities. It's a model which has relatively proven its worth in a lot of countries around the world. In the countries with more experience with VAT, such as in Europe, and rightfully you're mentioning Poland, but you can see also evolutions in Spain as well and in Italy. You see a move towards much more software-based automatic exchange of these transactions, something which also happens in China and in Brazil. So I do think it's the model for the future, but I think baby steps are required in the GCC. We've just come to the realization that VAT has been introduced in 2 countries in the GCC. Let us try to digest this right now. But I do think with the ambition of both tax authorities in the UAE and Saudi, there will be a will to move towards such a system. And I think it does reduce and help compliance for businesses on one side, and it provides more transparency on the side of the governments also wanting to follow up the compliance rate and the detecting fraud patterns and so on. Managing the tax revenues is something which is essential and which is helped a lot by the implementation of these kind of measures.
Okay, so some of the common issues that we keep seeing is on the topic of advanced or prepayments. So either you're buying something from a supplier and they're asking for money up front, or you're making a sale and again you've asked your customer for money up front, and you've most likely given them a pro forma invoice. Now, you are not allowed to charge VAT on receipts or pro forma invoices. So the companies that are issuing or asking for these payments would obviously have to account for that VAT. But what we're seeing is that in the ERP systems, companies are trying to use what we would call or classified as a prepayment, and asking for VAT to be on those prepayments in the actual system, which of course is incorrect, because the supplier has to be invoicing them correctly, and there is no tax on a prepayment invoice. So do you have an opinion on VAT and advance payments, or indeed prepayments? And have you seen where companies have been making these mistakes?
I've seen a lot of companies making mistakes. Not in the least the biggest companies in the GCC even, because there's a fair amount of confusion on how to what my taxable base consists of, and it is, to be fair, it can be quite challenging because sometimes you will be asking for a deposit, which is outside of the scope of VAT. Other times you will be asking for an advance on an actual service which you're requiring, and if that is an advance for an actual service, then that advance is subject to VAT, and you do see businesses struggling with how to account for that and how to reconcile it with the eventual service being rendered. Another one, I think, in terms of the complexity is often you can overpay a service to businesses. Let's say you owe 99.5 and you overpay and you get a credit of 0.5 for the next payment, and you see that a lot of businesses struggle between the invoicing bit and the paying bit and how to reconcile the two. So yeah, I think it's a fair struggle, especially taking into account the transitional provisions that we have. I think that adds another layer of complexity on how to deal with it. Yeah.
A lot of companies that we have worked with outside the GCC will have a separate application for handling employee travel expenses. But what we've seen in the GCC is that this tends to just go through payroll or just entered in a standard payables process. Quite often petty cash would be used. But I think it's when things like petty cash are used, it makes it very difficult to recover any of the VAT on those travel expenses. What's your experience around this? You know, should companies be introducing expense solutions to properly process the VAT?
I think the solution follows any expense policy that is adopted. So the first step is to adopt an expense policy to say which kind of cost can you expense, under what circumstances, what is the documentation that you need to ask from your suppliers. If all of that is in order, then you can start thinking about what to do with those expenses. And I think what you're implying is a lot of the businesses in the GCC as well, if they have certain travel expenses abroad, they are able to recover that input VAT, provided they ask for the refund of this VAT. And I think a lot of the businesses today are not doing that at all, because they're simply still at the stage where they're trying to digest the implementation of VAT. But I do think that this will be an area of increased attention in the next few months. Hotel invoices that aren't in the name of the business, for example, or don't have the VAT number of the business. I think all of those little errors can be costly, because you wouldn't be able to recover the input VAT.
One of the risk areas we have seen is the way companies have customized or created their VAT reporting. In particular, the way interface data from, say, a third-party system has been captured in their main ERP system, but for the VAT reporting, they are recalculating the tax on the report itself, rather than taking those actual values from say, the source system. Have you seen this, and how important is it that they actually use the values, the real values that were captured in the source system at the by the original, say, a point of sale system, and how important is that to be then shown on those tax reports?
I've seen quite some confusion around point of sale systems and how these lead back to the actual accounting and reporting. Cash receipts, which are supposed to be simplified tax invoices, they are often not compliant. They have a different value than the actual invoice. All of this is due to the use of different systems at the same time. I personally don't think it's a good idea, and you need to stick to, as much as possible, one source of information. And you can see already that today it leads to simply errors in the reporting.
Being a European, establishing yourself in the GCC, you've probably seen things done a little bit more different compared to back home in the EU. What are the biggest factors to actually working in the GCC? The reputation, being able to deliver. And have you found any differences in doing business between the GCC states and also between the GCC and other countries?
The GCC is an extremely interesting region and offers a lot of possibilities for the setup of companies. Like ours, we wouldn't have existed without the introduction of VAT, obviously. But there's an institutional framework, especially in the UAE, which helps us to set up our business and to serve our clients. In the way of doing business is definitely very different. The way that we've been advising our clients has also been very different, because obviously I came from a mature tax background, and you come to an economy where there's barely any tax. So that it is required that you take a step back and you go back to the fundamentals, and you have to advise again on things for which previously you wouldn't have advised on. And I think gradually we'll get into the more difficult bits and the more detailed bits of the taxes, going towards the more fundamental issues. So I'm very much looking forward to those and solving those. I think the GCC as such is an extremely interesting environment for the launch of VAT. A low tax environment on which today you're applying tax, it requires a very big shift in the mindset of a lot of people. But we're very excited to be established here, and very much looking forward to the next few years, how this plays out, how VAT will play out in the other GCC member states as well.
So, for those GCC countries that have not yet implemented VAT, what would be your advice in terms of them starting and getting ready? In our experience, the biggest mistake, or rather the biggest risk, I suppose, is that we've seen in Saudi or Bahrain, is that customers left everything too late. I mean, from a tax automation point of view, it doesn't matter what the tax rate is, what data is being interfaced in, and what items are going to be exempt. What matters is that you can determine a tax rate, add a tax line to an interface, or change the determination based on the items that you're actually selling. You know, you can do the correcting everything after you've got the final legislation. So in your opinion, when do you think companies should be starting? You know, what should they be doing now? So, for example, in Oman, what should they be doing now to get ready before the final legislation is released, or even even the draft legislation is announced? You know, what they should be looking. You know, should they be looking at the existing GCC countries as a guideline to actually start the work?
It's an extremely interesting question, and I think it depends on the size and the complexity of your business. I think a good rule of thumb should be 6 months, which means that for some of the other countries, the GCC countries, that is now. I think why 6 months? IT implementation, which would be Innovate Tax's bit of the implementation, takes a lot of time. Preparation, implementation, configuration, testing, and so on. The bit prior to that, where we often come in, is, okay, let's have a look at your structure, let's have a look at the types of transactions that you're doing, and let's have a look at the impact of VAT overall on our business and how to potentially mitigate against the adverse consequences of this. I think in terms of looking at the UAE and Saudi, I think a lot of businesses underestimated the impact of the introduction of VAT, the work that it would trigger. You can tell it from the type of questions that we still get from clients right now. I think some of them were well prepared. Other businesses underestimated the impact. Even the ones that were well prepared, they always run into things which they didn't think of. And I think that's the key message. You need to plan ahead. You need to plan very well ahead as much as possible. There's still going to be little details which aren't, which you didn't think of, but which you can always tackle later on. But I do think time is of the extreme essence.
And this is where they should be reaching out to companies like Aurifer and obviously Innovate Tax to ask them, you know, based on our experience, you know, our extensive experience, what they should be doing, because I would assume that we can cover a lot of the areas that they haven't got the experience in.
Yeah, I think looking for, so in selecting your advisor, I think the track record is extremely important. Businesses that have done the implementation in the UAE and KSA, by this I mean businesses that have assisted other businesses in the implementation in UAE and KSA, they are worth a lot of money because they're worth their money in terms of the services which they will bring, the experience that they will bring to the table. I think it is highly important. It's a matter of not leaving it up to only the accounting department, engaging also the other departments, the IT department, the finance department, the legal department, and taking it broader, because the impact is much broader than just having to account for VAT.
Great. So definitely the advice is to start now, get the right advice, and you'll be in a much better position when the actual time comes to go live.
Yes.
Thank you, Thomas. Thank you very much for your time.